Hi, Sandy Botkin here. Most people miss huge deductions here that they didn't even know was in the tax code. And there are two big reasons. The first reason is they don't know what they don't know. The second reason is procrastination. That probably loses more deductions than any other reason. The problem is that people are terrible at documenting what is needed for the IRS. Well, TaxSpot helps you easily record the documentation part by allowing you to simply snap pictures of your receipts and fill in quickly all the information you need for the IRS, so you will be 100% IRS compliant. This also works for Canada Revenue Agency as well. And I'm going to give you some tips on how to increase this deduction. In fact, who are your prospects? Who are people who give you referrals? Everyone. So if everyone is a prospect, almost every meal you have with someone is deductible. Does that make sense? What you can deduct is 50% of your meals, your entertainment, and your fun. In fact, IRS says that you can write off 50% of your fun, and that includes movies, plays, shows, as well as 50% of your friends' fun, if you talk business within the same 24-hour day as the fun. Does that give you enough time? I can tell you that the average attendee at my seminars increases their deductions just in entertainment by several $1,000s a year. Did you know that you can write off your fun? Did your accountant ever send you a letter showing you how to do it and tell you about that 24-hour rule? If you're not keeping meticulous records, you're in jeopardy of an audit, and you're probably not maximizing your deductions. In fact, most receipts are lost either by sending your clothes to the dry cleaner or just simply misplaced. This happened to me. I was on a business trip. I put my receipts for travel in my pocket, and sure enough, it got dry cleaned and I couldn't read the receipt. Do yourself a favor. Stop worrying about receipts. Use TaxSpot to simply snap pictures of receipts and ensure that you are tax compliant in just seconds. And for those who think that a credit card statement does the job, you're wrong. My track record shows that if you don't record the deduction when it happens at the point of sale or at the point of service, then there's a 90% chance you will never go back and bulletproof your records. IRS wants you to document certain things, which I'll get to, within 24 hours that you incurred the deduction. If you don't do it, you lose the deduction. And what do you have to document? I call them the 4 W's and an H. Who, where, why, when, how much. Who, where, why, when, how much. If you don't do this, or if procrastination sets in, you'll be hit with an IRS walletectomy, the surgical removal of your money without anesthesia. So the bottom line, TaxSpot will solve your procrastination problems and make you 100% IRS compliant.